Hey, first of all, I would like to thank you for a very good presentation of the SFree company. Even though your analysis seems very solid, I would like to shine light on the valuation of the company from a slightly different point of view. Our valuation of the ST stock suggests that the company is overvalued by 13%. And along with an industry analysis, which suggests a negative outlook in the future, we are very certain about our recommendation for this stock, which is sell. The valuation we performed is based upon a discounted free cash flow analysis. And in order to be able to do that, we made a financial forecast, we calculated the free cash flow, we found the discount rate, the WACC, weighted average cost of capital, and we came up with a valuation of the SDA. Our valuation showed that the stock is fairly traded at 12.3 baht, which is 13% below the closing price yesterday, which was 13.9 baht. So, first of all, I would like to show you our main assumptions made in the financial forecast in order to make it a little bit more credible. So, first of all, the revenue growth, the most important part of our forecast. We have predicted the revenue growth to be around 26% the 3 following years, which is a little bit below the average from the 3 last years. However, there's an upside and downside on everything, and in this case, the upside is that the company plans to make huge investments in new plantations, which might facilitate the rapid growth. However, the company itself states that the low price in natural rubber will probably not rebound in the foreseeable future, in opposite to what the other group said. If we move on to gross profit margin, another very important assumption, the company has made a prediction somewhere for the gross profit margin, somewhere between 5 and 7%. They have come up with a recent analysis which suggests that it might be even lower. But we used the 5%. At last, I would like to express our anxiousness about the level of total debt. Since they are making these huge investments in the new plantations, they will have to take on pretty much debt to finance it. And the company says that it's probably even going to be forced to issue new stock in order to finance these investments. So these assumptions, along with some others that we made, of course, we might be able to discuss that later on, gives us the predicted net income and free cash flow as shown in this graph. However, if the gross profit margin falls below 5%, the valuation of the stock will fall even lower, since both the net income and the the free cash flow will drop as well. So let's move on to the valuation part. The most important part, not maybe the most important, but a really important part is calculating the WACC. We have used the equity and the value of the firm, of course, and in order to calculate the RE, we used CAPM. And in order to do that, we found the risk-free rate for a 10-year bond, adjusted beta found on Bloomberg, and a market return, which was an average of the SET for like 38 years. The RE is 9.58%. The weighted average cost of capital then equals 8.98%. This gives us the value of the stock on 12.31 baht. The stock actually closed on 13.9% yesterday. So it's a negative side of like 13%. The softer side of it is, if we start looking at the upside, a 4% growth in the global rubbery market. It's a good thing, definitely. Large market expansion in China, which STA is planning. However, there's a huge surplus in the industry for natural rubber. And this has caused... Oh, time out. Thank you.